Hello everybody and welcome to the Trading Setup channel. My name is Niku and on this channel we explore the world of trading. A small balance is not a sentence. It is your chance to learn to trade the right way from the start. A lot of people fail not because their balances are small, but because they don't know how to adapt their strategy for real volume. Today I'm going to show you a strategy that is perfect for a small balance, and it will help you stay in the game even after a few mistakes. By the way, don't forget that I've created a free resource for traders with templates, indicator settings and risk checklists. Everything together in one place. Link is in the description below this video. Now let's get to trading. So today we're going to be using two indicators. One of them is the Ichimoku indicator. It's a very old indicator. It was first published in 1969. In Japan, it translates to equilibrium at a glance, is what it means. So the full name is Ichimoku Hayu. We're going to have a look at that. I'm going to add it to the chart. I'm going to explain to you guys what it consists of, what everything means when we see it, because it can be very intimidating to new traders when they first see it, but it is a very versatile indicator. It's the only indicator that I will use by itself without any confirmation from other indicators, although we're not going to do that today. Today we're going to use two indicators. We're going to use the Ichimoku to find entries, and we're going to use the RSI, the trusty old RSI, to confirm our entries for us. So let's get to the charts. Let's add the Ichimoku to our chart and we're going to have a quick look at what this is. The first thing you will notice, the most obvious, will be this band here. This is called the Ichimoku Cloud and it is plotted ahead of price. So we can see that while plotted ahead, it gives you an idea of what price will be doing, although you cannot take entries based off this. Okay, so but at the moment we can see the cloud is opening up. We've got this line dropping, this one's flat, so the cloud's opening up, showing us that we should be seeing more bearish movement from this asset in the immediate future. Okay, so this is the cloud. The cloud is used, or the way I use the cloud primarily as a support and resistance band. You do not want to take trades inside, while price is inside the cloud. You typically going to be avoiding taking any entries. We're going to look for entries outside of the cloud. But you can see if we scroll that price or the cloud is very often used as support and as a support and resistance area. This asset is very volatile. Let's switch to something else. If we see if we can get an asset with, there we go, a little bit smoother movement. So this is very clear how the Ichimoku Cloud is very often used as a support or resistance area. We can see that price keeps on testing the cloud, it did a small little break here, but it did push back, again tested the cloud, pushed back, again tested the cloud, pushed back. So we can see that quite often the cloud is used as or functions as a support and resistance area. So this is the cloud. Next up we have the Tenkan-sen, the Kijun-sen. This is the red line you see here, and then we also have the Tenkan-sen. That is the yellow line that we see here. Maybe I should make them just a little bit more a little bit thicker so we can see them more clearly. And there we go. Okay, so we've got those two lines there. Again, the Kijun-sen, which is the red one, is one of my favorite lines to use, again, as support and resistance. If you have a look, you will see that quite often price really does respect the Tenkan-sen as well. Does this mean I can take a trade every time it touches? Absolutely not, but it does. We can see that quite often it is used as a support and resistance. Price really does respect the Kijun-sen line especially. So one of the ways that people use these two lines as well is playing the crossovers. We can see that when we have a bullish or bearish crossover, price tends to start going in that direction. This is not a great example of an asset. Okay, so we had a bearish crossover there, or actually, in fact, there we had the small retest here, and then we had this massive sell-off. Again, bearish crossover, and we can see price continued down, bullish crossovers, and price continued up. Okay, so using the crossovers of the Tenkan and the Kijun-sen lines can assist with finding entries, but you will need something else to confirm this, the crossovers for you. You cannot just simply trade the crossovers by themselves. I really don't recommend it. The last thing we have on the Ichimoku is the Chico span, or also called the lagging span line. So this line here, this is the light blue line, I suppose. I forget the name now. This line is an exact copy of the current price movement, but it's plotted 25 candles behind price. So it's an exact copy. You can see when price was moving here, we had that little rest period there. It pulled back, made a high, another high here, but it was lower than the previous one. And then 25 candles back, we can see the exact same movement on the Chico span. We had the dip, we had the push up. Okay, so it's an exact copy. It's a line version of price movement. You know, let's switch to a line chart quickly, and this will show you exactly, exactly show you. Let's switch. I'm just going to disable the rest of the lines just for a quick moment. There we can see that this is an exact copy of the price movement. It's just plotted 25 candles or 25 periods behind the current price. Okay, as we can see, it's an exact copy of price movement. Okay, so that is the lagging span. They call it the lagging span because it is running behind. It's the price movement, but it's plotted behind our price. And let me show you. Let's get these back. Okay, so one of the ways that we use the Chico span is when the Chico span actually crosses the actual candles, as it did here. When this cross occurred, this would be where price was at that point, and we can see that after the Chico span crossed bearish over through price, we had a drop off there. And the same happens if we get the bullish crossovers, although because we're on a 1 minute, this is not very smooth at the moment. You will see, let's go to a 5 minute chart maybe. You will see some smoother movements. There we had a bearish breakdown. Price continued all the way down, tested, but never really quite broke. There we had a decent break, and when this break occurred, and we got the this would have been a good entry point. If this was a forex chart, for example, this would have been a good entry point for a buy. Sorry, there, because we don't really want to trade inside the cloud. But we had the break followed by the test of the Kijun-sen, which got rejected. Price pushed up, and as soon as it closed outside of the cloud, we could have taken a buy trade, and that would have been where we would have gotten out. Probably would have been stopped out at this level here. If you guys watched my one of my previous videos where I explained how I manage my stop losses, I never close a forex trade manually. I always get stopped out on them because I manage my stop losses. I keep moving them, but I explained that in a different video. And if you guys would like me to do another video on that, just leave a comment requesting it, and we will make a plan. But that's the Ichimoku for now. So what we're going to do is, as I said, we're going to use the Ichimoku and the RSI. We're going to leave the RSI. We're not going to change the period value, but I do want to make a visual change to this because of the way that we're going to use it. It will become clear as soon as I'm done. This is not something you have to do, but I like to change it because this looks totally different now. And we are mainly going to be using the middle line here on the RSI, and then we're going to use the RSI line itself. So the way we're going to find entries is we're going to look at areas where price goes back to either test the cloud itself or the Kijun-sen line, which is the red one. So we can see here that we had the retest, and my RSI turned down bearish here. It crossed the 50 line when price was here. You need to keep in mind that the RSI is a momentum indicator. So while the RSI line is above the 50% line or 50% area, we have bullish momentum, and as soon as it goes below, we have bearish momentum. Doesn't matter how much, but we have bearish momentum. So if you once you understand that, you will see that we had this massive drop off here, and all the time the RSI was below the 50 line. It did a small retest here, the retest failed, came back. It did eventually break through on that area there, and we can see that as price was moving up, we had the same as with the drop, but the RSI remained above the 50 line the whole time until we had this massive pullback here. But we did have a few tests of the 50 line, and all of these got rejected. And this is these rejections are what we're going to be using today to find entries. So the ideal entry for us will be price moving in a direction, then hitting either the Kijun-sen or the cloud area. And when this happens, we want to see the RSI go back to test the 50 line, and then we're going to wait and see if it does reject. So if price rejects from the Kijun-sen or the cloud, and at the same time we see the RSI reject from the 50 line and stay on the side that it was, so if it's if price is moving upwards, we're going to see if the RSI remains above the 50 line, and when price is moving downwards, we're going to see if it tests the RSI tests the 50 line but gets rejected and remains below the 50 line. The reason we're doing this is every time the RSI tests the 50 line and gets rejected, suppose price is running upwards. Let's take this example. Price is moving upwards and the RSI comes and tests the 50 line and gets rejected every time. This is telling me that we are still maintaining bullish momentum. So we haven't changed momentum. The bullish momentum is still there. It just decreased a little bit, and now after the rejection we can see that it's picking up. The RSI is going up again, so we can say that the momentum is picking up again. So we're getting, like, think of it like a second wind for the move. So that's what the RSI is telling me. That's the reason I like to trade with my RSI like this. As a rule of thumb, I don't really look at overbought and oversold values on the RSI. In general, there are some things that that it is good for, but in general, I looked at the RSI in relation to where it is to the 50 line, because I want to see where we are headed. Remember, I've said this so many times, we cannot predict what price will do, but it's fairly easy to actually just follow what price is doing. And that is where this RSI, this way of using the RSI comes in. I have explained this in previous videos. You guys will know that this is one of my favorite ways to use the RSI. Okay, so that's the rules of our strategy. We're going to see, look for retests. Let's see if we can find a quick example. This would have been an example of a sell entry for us. We had price running down, came back to retest the Kijun-sen here. It failed, it pushed through, and then price came back and closed below. And then we can see that we had the rejection of the RSI on the 50 line as well. So we're going to do that. We're going to be doing 3-minute expiries. I almost forgot to mention that. We're going to be doing 3-minute expiries, and we're going to be trading this on the 1-minute chart. Okay, so there is an example of a sell trade we could have taken. Price came up, tested the Kijun-sen, got rejected, and at the same time when this happened, my RSI got rejected off the 50 line. So an entry on any one of these two candles, either that big red one or the small green one that pushed back a little, entry on any one of those for 3-minute sell would have been good. Okay, so now that we understand, we're ready to look for some trades. Okay, we're ready to start flipping through some assets and see if we can pick up some trades using this strategy. We're just going to go through the list and see if there's anything that's trending. This is a continuation strategy, by the way. So we're going to look for assets that are trending. That's where we're going to find our entries for this. There's all strategies can be broken down into two main types: continuation strategies and reversal strategies. Now, we're using a continuation strategy today. That means that we are looking for a trend and we're going to continue. We're going to take directions or take trades in the direction of the trend. So we're going to look for pullbacks. Let me see if I can find a decent example quick and explain the difference between the two. Okay, so price at the moment here, we can see price is in an upwards trend here. This might not actually, come to think of it, this might not be the best example. Let's see if we can find something that's trending really, really nicely. Okay, this will do. Okay, so we can see that price has been in an upwards trend here. Let's go to from here to here. Price started trending upwards. Now remember, a trend is defined the following. A bullish trend is defined as price making higher highs and higher lows. And we can see this is what's been happening here. We can see price formed a high, made a pullback. So that's a new higher low from that low. And then price continued upwards, made a high, did a pullback, made a high, did a pullback. So it keeps making higher highs and higher lows. We did have an abnormal pullback here, but it went right back to where it was and then just continued the same pattern up until this area here, where we saw that we started making new lows. And that's the definition of a bearish trend. Price making lower highs and lower lows. Okay, so this will not be a trend. We cannot consider this a trend because price is not making lower lows and lower highs. This is just a pullback in a bullish trend. I see a lot of people refer to this movements like this as a bearish trend. It's not. Okay, so price isn't making lower highs and lower lows. This is a correction in a bullish trend. Keep that in mind. So whatever strategy you're using, we might have a trade on our hands here. Let's see if this rejects. We don't want it to go through the resistance area. The Kijun is offering us some resistance here. RSI is testing. Okay, this broke. RSI broke the 50 level, so this is not a trade for us. This is not a trend reversal either. This is just outside our strategy parameters, so we're not going to take a trade on this. But this is still a bearish trend. Even though we got this big green candle here, this is still a bearish trend. So whatever strategy you're using, you need to figure out, is it a reversal or continuation strategy? Continuation strategies, like I said, works really well when the market is trending in a direction. That's where continuation strategies works really well when the market is trending. That's where they shine. Reversal strategies, that's where you're going to get a lot of entries when you're trading, or when the market is ranging. Okay, keep that in mind. That's what we're looking for. We're looking for something that's trending because this is a continuation strategy, and we're looking to find those pullbacks where the pullback is not a reversal. Very simple concept, really. And like I said, every single strategy out there, any strategy that you've used before, will be either a continuation or a reversal strategy. Okay, so this is a bullish trend because we're still not making new lows. Even though we are pulling back, it won't always be perfect and look beautifully. Okay, sometimes it will be sloppy like this. This is very sloppy movement. It's kind of unclear. We might be seeing the beginning of a bearish trend here. This could continue its way downwards, but this, I would still define this as a bullish trend. Okay, so figure out, if you didn't realize this before, figure out what strategy you're using, regardless of the indicators you are using and the parameters of the strategy. This looks like it might give us an entry. Let's just see. I would like to see price close above the Tenkan Sen. We're in a bit dodgy area now because we are seeing the Kijun and Tenkan getting ready to make a bearish crossover. So this is a little bit of a dodgy area, but price, the RSI is still showing that we still have bullish momentum. We haven't switched to bearish momentum yet on the RSI. So I would like to see a big green here, but it doesn't look like that's going to happen. So I'm going to stay away from this asset. We are below support. We are seeing the Tenkan and the Kijun getting ready to make a bearish crossover. So when this happens, I don't really want to go against it. My RSI is flatlining basically on the 50 line, so this could go either way. This is not a clear rejection like this would be this part here. This is beautiful rejection. This is beautiful rejection from the RSI, but this is way too risky. This could go either way, so I try to avoid trades like those. If they're not clear, if I'm uncertain about it, I'll rather skip it and wait for the next entry. We get a lot of entries during the day. There's no need to take unnecessary risks. This was a decent rejection actually. It's a pity we didn't see it. So we can see our price is moving downwards here. It keeps testing. This is the ideal conditions for us to use this strategy. Okay, so price is trending downwards. There's no doubt about it. We are in a bearish trend. It's making clear lower highs. It's making clear lower lows. It has been for quite some time. So this is the ideal conditions. It's too late for me to get into a trade here. The trade should have been on this candle here when we got that rejection. RSI didn't quite touch the 50 line, but it did turn downwards again. So it did go up to the 50 line area and then turn back down again. This is the ideal setup that we're looking for. Unfortunately, we missed this by 2 minutes, and so we won't have a trade there. But this is a clear trend, and this is where we're going to be looking for entries with this strategy. Okay, so it's very, very simple. At the end of the day, it's very simple. You need to understand what type of strategy you're using, so that you can identify if the market is ranging, or if there's not a lot of movement like this. If you start seeing movement like this on an asset, don't try to find entries using a continuation strategy. It's as simple as that. This is not great movement for continuation strategies. That's where your reversal strategies will perform really well. And that's also the reason why I never trade with a single strategy. I trade with quite a few strategies throughout the day. And it's a balance between continuation and reversal strategies. Because like I said, if you trade with a single strategy, and there's nothing wrong with trading with just one strategy. Especially if you are new to trading, if you're a beginner and you don't have a lot of experience, I recommend you trade with the single strategy. But you need to understand that you won't always get, or there will be times when your strategy stops giving you entries. That's expected. It doesn't mean your strategy stopped working. It just means that you need to be patient for a bit, because the market conditions that are good for your strategy has changed. But then once you get the hang of whatever strategy it is you're using, once you really get the hang of it and you understand it and you can trade it without thinking, you know what to look for, you take your entries without thinking twice, then you can look at maybe adding another strategy to your regiment and then start trading with two. And then you go through the process again. Once you got the second strategy set, and you can take your entries without thinking about it, you really understand what you are doing and what your strategy is showing you, maybe add a third and keep it in balance. If you start with a continuation strategy, add a reversal strategy as your second one, because that's going to increase, or that's going to that will allow you to start to keep trading more when the market is ranging. Okay, let me start it this way. So if you have a continuation strategy and the market is trending, you're gonna get entries, and then when the market goes into range, you're not going to get entries. If you add a reversal strategy as your second strategy, then you're going to get entries when the market is ranging and trending. So you will get less periods. It will still happen, but there will be much fewer periods where you don't find entries. But please do not go and add a ton of indicators to your chart and try to go from one strategy to 5 or 6 at the same time. This is going to take you some time to get used to. Find a decent continuation strategy or a order reversal strategy, either one. Explore it, understand it, make sure it becomes second nature to you. So you don't need to guess anymore. You don't need to hesitate anymore. Only once you reach that stage, you add a second strategy and you go through it again. If you add a bunch of strategies at the same time, you're gonna quickly find that you are seeing a ton of stuff on the charts, and quite often you will see conflicting information, and you're going to end up being confused even more, hesitate even more, which is definitely not a good thing. So keep that in mind. Please don't go and just add a bunch of stuff to your chart in a single go. We're not finding entries though, which is unfortunate. This broke through, although if this does turn into a big red candle, we've got 30 seconds left. Let's keep an eye on this. If this does turn into a big red candle, it's going to pull the RSI back down. But it does need to turn red, and really red, not just close. Let's see. If we do get a decent red candle, we could risk a sell trade. That's not a decent red candle, and also not enough to pull my RSI back down. Okay, so we're going to stay out of this. Let's start at the top of the list again, see if we can maybe just pick up. This is a brilliant example of how strategies sometimes do not give you entries for a while. And we can take any asset and just scroll back a wee little bit, and we can see we had beautiful entry opportunities a short while ago. There were some buy opportunities, some sell opportunities that we could have taken, but right now, and we're not really finding entries right this moment. And we can check this on any asset. We will see that it gave us, there's a beautiful entry there, there's a nice entry there, another nice one there. So a bunch of buy opportunities here. Then it started kind of ranging, a lot of ups and downs, and we can see that we didn't find, there was no real trading opportunities here. The RSI kept flirting with the 50 line, making it the occasional spike, but always returning almost immediately. This is price action that will definitely be bad for this specific strategy. But we did have periods where we had beautiful price movement, and this will be true for every single asset. Okay, so when it starts slowing down, I'm not going to go change my strategy and tinker with it and start changing settings and stuff like that. I'm just going to wait it out. It's a pity this dropped so much below, and we can also see that it looks like we're going to get a bearish crossover on the Kijun and Tenkan real soon. So again, I'm not going to risk a trade on that. So I might be struggling now to find entries, but in 2 hours time or so, I'm going to find a ton of them. That's just the way it goes. We might get something on this. Let's stay on this for a minute. We've got 30 seconds left on this candle here. Let's see if we go test it. RSI is what we want to see. It's coming up quite hard, quite strongly, quite quickly. Either way, it's coming up to the 50 line with quite a bit of force. A nice sharp upwards turn there. We want to see it turn down now, and we want to see price turn down as well. If this happens, probably on the next candle, we are in business. We might get a sell entry here. Okay, so what we want to see is price close below this body here. Let's go zoom a bit bigger. We want price to close below this body. The reason for that is if it does, it means it will be closing below the Kijun Sen. If it closes above, I'm not going to be taking a trade here either. We want price to come down now. We want the RSI to turn down. We're only going to get the RSI nice and turned down if we get a decent red candle. It doesn't look like it's going to happen though. 20 seconds left on this. I don't think it's going to turn into a red candle before the candle closes. Yep, it's definitely not. When I make these videos, I always hope that the market behaves and gives me a few decent examples of entries. This almost looked good. RSI is not behaving though. It's flatlining. It's been I would have considered a sell trade here if it actually tested the 50 line, but at the moment it's not a sharp rejection. It's just, you can see it's like basically like a curve. This is the ideal type of movement. We want to see it go up and then go down immediately. But this curve thingy here, not ideal. And there's no point of me taking trades that's high risk and then showing you guys, ooh, look, I did a good trade. No point in doing that. This is Cloud and Kijun rejection. I'm gonna go with a buy here for sure. Okay, so we had beautiful rejection. We tested the Cloud and the Kijun at the moment. We had the RSI trending upwards very slowly and then making that sharp turn down, and we didn't break the 50 line and we turned back, our RSI turned back up. This should be a decent trade for us, and we'll just wait it out and see what happens. We can also see that the Kijun and the Tenkan are opening up. They're diverging away from each other, which is a good sign. And we can, not only did we test, the price test the Kijun and the Cloud and got rejected, but the bodies got rejected by the Tenkan Sen as well, which is another good sign that we should see price go move upwards in the immediate future. Not necessarily way up, but we should see some green coming in at any moment. 2 minutes left on this, so I'm going to bookmark this, and while we're waiting for this trade to finish, we'll come back to it before it closes. While we're waiting for it, I'm just going to see if I can maybe find assets, another asset or two that might give us an entry soon. Here's a beautiful rejection as well. Not at the top of the list again. We've got 1 minute and 20 seconds left on this open trade that we have, and we'll go back to it before it closes. I just want to see if we can maybe find 1 or 2 more entries. I would love to do 2 or 3 trades while we're doing this, but sometimes the market doesn't play along. It's as simple as that. Sometimes we're not getting our entries that we want, and there's nothing you can do about it. And it's the best thing you can do about it is nothing. Once you start tinkering and start forcing entries, stuff like that, you're going to find yourself in very deep trouble very quickly. Okay, let's go back to our current trade before that closes, and we can see that it behaved exactly as expected. We had the push downwards, we had the rejection, and we are seeing price move upwards. We've got our higher lows, higher highs. So this is the ideal setup. We got that beautiful rejection, RSI rejected beautifully, and we got rewarded for being patient and waiting for a good entry from our trades or from our strategy. Okay, so it's been 20 minutes since we started trading. We're not getting a lot of entries, so I think we'll stop the video here for today. Please keep in mind, this will happen. Doesn't matter what strategy you use. There will be times, or quiet times, and there will be busy times. It's part of trading. Accept it. Don't force your trades. When this does happen, don't start forcing trades. Wait for your strategy to either start giving you entries or go do something else for half an hour or an hour. It's quite simple. Okay, if you want to see how we apply this strategy live, then join our community. There, we trade in real time, analyze mistakes, and learn to work with risk, not against it. But I don't just accept anybody. Only those who are truly committed to growth get to stay in the group. To get in, message me personally. Contact is in the description below this video. And of course, don't forget to subscribe to this channel if you enjoy this content. There's lots more videos coming on strategies, psychology, and emotions. I'll see you guys in the next video, and until then, may the pips be with you.